best growth stocks to buy in June 2020. Welcome in, guys. My name is Manico. Today we're going to be discussing two stocks that I own that have huge growth potential in the next 5 to 10 years. And I'll be giving you my full bullish thesis on them, so I hope you do enjoy. If you do, don't forget to destroy that like button down below, and let's get right into the video. Alright, so stock number one is Tesla. So first we have Tesla's Battery Day, which should be happening in June, and this is when Tesla will likely be announcing some huge battery improvements they've been making. These improved batteries, when put into their vehicles, will probably make them a lot more efficient, durable, and a lot more powerful. Already, Teslas are some of the highest ranged vehicles in the electric vehicle market, so these battery improvements might bring them even further into the lead. So number two is Model Y. So Model Y has been starting to sell recently, and it should become Tesla's most sold vehicle out of all of them. So in the US, the SUV market makes up about 50% of all sales every single year, as compared to 32% for cars. So right now, the most popular car for Tesla is the Model 3, but I believe that the Model Y will overtake this, because not only is the market bigger, but the Model Y and the Model 3 share about 76% of the parts. Meaning that Tesla, instead of having to create new parts to make the Model Y, they literally just have to take the parts that they're already making for the Model 3 and just create more and more of them to implement them into the Model Y. So by doing this, Tesla will have huge margins on the Model Y, because they won't have to be producing new parts just for that vehicle. They'll just use the parts for other vehicles. They only have about 25% of the parts for the Model Y that are unique to that car. So number three is Tesla's price reduction that they just announced in North America, making their vehicles a lot more competitive to all the other vehicles in the market. So if you're taking a Tesla and an ICE vehicle and they're basically the same price, and the Teslas, you don't have to pay for gas anymore, well, then that makes Tesla a no-brainer. And this is apart from all the technological advancements that they have with AI and self-driving and all that the ICE cars don't have. So just looking at the cost of the car, if they are a lot more competitive, then the gas savings alone will make the Tesla a no-brainer. So by my calculations, I believe Tesla will probably reach about $4,000, if not more than that, by 2030, and this is how. So in 2019, there were about 77 million passenger vehicles sold worldwide. Now, assuming this number remains constant through 2030, which it might increase, it might decrease, but assuming it remains constant, here are the numbers I came up with. And just keep in mind, these are conservative estimates, because I always like to be conservative in my numbers when estimating the future value of a stock. So if 60% of new vehicles sold are electric, and 10% of those are Teslas, because Tesla, I do believe, have the potential to have more than the 10% market share, but assuming they only have a 10% market share, and the average selling price for Teslas is about $45,000 US, and assuming Tesla is able to get their net margins up to about 15%, which I believe is extremely reasonable, they might even get to 20%, but assuming it's only 15%, here are the calculations. So if 60% of all new vehicles sold are electric, and Tesla has 10% market share of all these vehicles, this means they'll be selling just above 4.6 million Teslas per year. With an average selling price of about $45,000 per vehicle, their revenue will be just above $207 billion per year. So at a 15% margin, their net income would be about $31 billion a year. So right now, the overall market is actually trading around a PE of 22. So for a company like Tesla that I believe will still be growing in 2030, a 25 PE would be extremely reasonable. So at a 25 PE, Tesla's future market cap would be around $780 billion. So as of right now, there are about 186 million shares outstanding. So when you divide $780 billion market cap by 186 million shares, you get a value of about $4,100 per share. So just keep in mind, these estimates only account for vehicle revenues and vehicle profits, none of their other businesses such as solar, insurance, battery, autonomous taxi networks, supercharging networks, none of that. This just accounts for the vehicles they'll be selling. So stock number two is Facebook, ticker symbol FB. So as one of the largest social media players in the world, Facebook has some huge growth potential for the long term because of these factors. So number one is that advertising has been shifting from traditional sources like newspapers and TV stations to social media and online platforms. So number two is that Facebook is actually able to offer advertisers an extremely specific number of users that they are targeting. Because of all the data that they have on these users, they are able to target specific ads to a specific segment of the population, and no traditional advertising platforms are able to do this. Number three is that since there are more advertisers wanting to advertise on the platform, and since there are a limited amount of ad spaces that Facebook can use them in, that means that ad rates are going to go up because competition between advertisers means that they're willing to pay more to get that one spot. And when more people want to get into that one spot, the price increases and ad rates increase, and this makes Facebook revenue also increase. Number 4 is that during tough times, companies usually cut down on advertising spending, and they usually look at their budgets very carefully and only spend their marketing money where it's most useful and most efficient. So when they look at their numbers and see that Facebook is extremely efficient in gathering all the data about their users and targeting these ads to specific segments of population rather than how traditional advertisers do it, that they advertise to everyone that watches that channel or reads that newspaper and that has no specific filter to see who that ad applies to, companies will actually see that advertising spending on Facebook goes a lot further than advertising spend on traditional channels. Number 5 is that people are essentially addicted to social media, and I don't see 2+ billion people that use Facebook on a daily basis ever stopping to use Facebook, at least in the next 10 to 20 years. And number 6 is Facebook Shops feature that they just announced that might have huge potential for the long term, depending on how serious they are about this initiative and how extremely competitive they want to get. Because if they want to get extremely competitive with all the users that use their platform, they'll be able to become a huge e-commerce player in the future. So I believe Facebook has the potential to become a $500+ stock in the next 5 years, and here's how. So global ad spending is actually expected to reach about $500 billion in 2023. But due to the pandemic and everything that's been going on, let's just assume it reaches $550 billion by 2025. Digital ad spending has been increasing by about 14% per year, so assuming that it will reach this amount by 2025 is not very unrealistic. So Facebook currently has about 25% market share in all digital ad spending, and I believe this will remain the case. Right now, Facebook has net margins of about 27%, meaning about 27% of their revenues gets down to their bottom line as profits. And I believe this will increase in the future because right now they've been spending a ton of money on recruiting new employees because of all the data scandals that have been going on and all that. But I do believe that as the revenues increase and their profits increase, that they won't need as many employees because most of their costs are fixed. So as they have more revenues, most of that drops down to the bottom line. So I do believe they'll be able to get these net margins to at least a 30 to 35% point. So if Facebook does have a 25% market share of the $550 billion digital ad spending by 2025, this means they'll be making about $137 billion of revenue every single year. And if they have a 35% net margin, this means that about $48 billion of this will be going straight down to their net income. Right now, Facebook trades around a 30p, but let's say this drops down to a 25, their market cap would reach about $1.2 trillion. With about 2.4 billion shares outstanding, when you divide a $1.2 trillion market cap by 2.4 billion shares, you get a future share value of about $500. This is also only including the Facebook platforms that they have currently. This doesn't include future acquisitions and any shops feature that may bring in extra revenue, or the Oculus virtual reality systems, or Libra currency, or anything like that. This only includes the Facebook platforms that they are running currently. As we've seen in the past, Facebook has actually been able to make some extremely profitable investments, such as Instagram, which has grown substantially since when they bought it. So Facebook has the potential to more than double in the next 5 years, despite all the hurdles they've had to overcome and the pandemic that has brought down ad spending right now. So I really hope you enjoyed this video and a deep dive into 2 of my favorite stocks in my portfolio. If you did, don't forget to leave a like down below and let me know in the comment section what your favorite stocks are. And don't forget to subscribe to the channel if you haven't already for more videos like this in the future, and click that notification bell so YouTube notifies you when I post new videos. But thank you for watching, and I'll see you in my next video.